All right, good morning, good morning. Let's go over here, this over here. Oh, I hit the button and it was like, do you want to update? I was like, okay, I guess so. All right, welcome to 2024. We will get things moving here. Oh, hold on. Click this button, click this button. All right, there we go. All right, so Tuesday. Sounds a little muffled. I don't know, it may have just been, could be my voice. It shouldn't be muffled. I don't know. Hopefully Kip did not mess up the microphone. Hold on one sec, let me see. Mm, I don't know. I think that's the right thing. If it's not, I don't know. If it's muffled, I don't know. Like I said, this is the I hope the God didn't mess it up. Kip is taking over. Yeah, Kip is just wrecking everything. Yeah. Again, we're on microphone number 2. Yeah. All kinds of drama. Yes. So we're gonna just go with it. If it's muffled, it's muffled. I can't adjust it now. So anyway, we got a little bit of movement out there with the yen, right? You're seeing pound, dollar yen and pound yen both up over 150. Big movers. Everything else out there, for the most part, dollar strength. And again, a lot of that is because of FOMC meeting notes today. You can see the JOLTS data coming in at 10 today is expected to actually increase. Again, not exactly what the Fed wants on that one. And Barkin this morning made some comments talking about it's increasingly conceivable, not inevitable. I was like, that's an interesting. I feel like that's a t-shirt too. Increasingly conceivable, not inevitable, right? Like that's a good one. I feel like that's a great one, right? Increasingly conceivable, not inevitable. You can go a lot of ways with that one. Drop in long-term rates may stimulate demand for new homes. Conviction on inflation economy to determine the rate path. Yada yada, all the same thing. And he's fun. It's interesting that he's talking about housing so much. Housing has not really necessarily been the big driver. Obviously, it's been the jobs market. So increasingly, yeah, exactly right. 6 months core personal consumption expense inflation is now just below the 2% target. So, we'll see. The central bank is making real progress in inflation while the economy remains healthy. The drop in long-term rates may stimulate demand for homes. I still don't understand that one, but okay, sure. I don't know if it's home. I think what he means by homes is not necessarily new homes, but just seeing home sales, because a lot of people haven't moved because they didn't want to deal with the rates. So yeah, is what it is. But that's what we got. Again, obviously, JOLTS and all this 10 o'clock data, extremely important. Seeing, again, the JOLTS data go higher, the job openings go higher, not exactly what they want. And who knows, maybe manufacturing, maybe manufacturing pops up to 48, 49. I don't know if it's going to go to 50, but maybe prices bump above 50. Who knows? But the big one's going to be meeting notes. We'll see. And again, Barkin, it would be odd if Barkin let all the secrets out. Maybe Barkin's being really, really kind of nice now for and then to slam us later. Tomorrow, right? Tomorrow, all day, but we're going to get it probably pretty early. The German preliminary CPI data on a monthly basis expected to show an increase. And we'll see where we go with that one. Right, that one would be important. And then obviously Thursday, we're going to see our non-farm employment change on our unemployment claims out there as well. And again, unemployment claims, again, we're not killing the economy. It's at 215. The non-farm number, 100,000. Again, the ADP is not necessarily correlating across. So we'll get that tomorrow morning before. But, typically that's a Wednesday, obviously because of the holiday this week. Yeah. Yeah. All right, so let's just jump over. Looking at the VIX first off. Again, a lot of chop back and forth. All through the holiday here, last week. We kind of stayed within that 14 to 12 and a half range, and we're kind of sitting there right now. We're jumping on the top side. Again, with all the dollar strength coming in, people worried about the Fed. What you're seeing is I don't want to say sideways movement, but you're seeing dollar strength roll back in, starting off. The Fed, and I hate to say this because it is what it is, but I don't think the Fed is going to be as weak as, again, the market overall thinks that it is this year. And again, seeing JOLTS data go higher, the market's kind of like, what? Right? Going higher? I don't know. I don't think that the Fed is really necessarily changing the trajectory too much right now. I don't know. Maybe the market is kind of grasping that, hey, wait, maybe the Fed's not going to do it that, be that aggressive in cutting. Right? Because again, if you can get inflation lower, there's no real need. I mean, we're not killing the economy. I mean, they're talking about, maybe there's no landing, right? The soft landing is there, right? Again, we're not back. There's no reason to necessarily cut interest rates if we're not being that restrictive, right? There's no big push for it. We just need to get inflation back down again. So we'll see where it goes with some of the notes today. But dollar, obviously, dollar taking off. Now, I say taking off, but this is kind of where we were last week. You know, the last time we talked, we were in the 102.50 range. So it's nice to look at this chart and be like, what the heck? I mean, we were sitting, where are we at? Right in this range, Thursday, Friday. We were sitting right in here, right around that 102 mark. Yeah, it pushed down. And again, this was between that Christmas and New Year's area. And on Thursday, we got down. We didn't break 100. It came to, what, 160? Yeah, 160 cents. And now it's pushed all the way back again. But it's been pushing. It's right back where we were. You know, so I mean, we could draw fibs, but this is the problem is, you know, it's such low volume during those time frames. You can see, look at this old level here. 1, 2, 3, basing in there for 4. Look at this. Hit, drop, hit, drop, hit, drop, hit, drop, all the way down. Look at the drama. Look at this stuff, right? Just coming up and grabbing that old level. You know, low volume time, it's easy to move things around. It doesn't really change us a whole lot. But now it's back to business, right? Now it's back to business. So you're seeing a push up. And again, there's a lot of congestion over here for the dollar. Actually, I'll just use this one. You can see there's a little bit of basing with a little bit of a touch right in there. Kind of an old gap here. Look at this. Boom, 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 boom. Little front run action right there. And that's what we're kind of slamming into. And you can see we're trying, right? We're pushing through. So, yeah, we're kind of where we were. Are we in an area where we're selling right now? You know, I think it's a decent spot. Again, the Fed is probably going to cut in 2024. How fast they do it is the big question out there. The market, I think, is a little bit overzealous on there. But who knows? Maybe we'll get some comments about kind of what the schedule of cutting is going to look like. I don't know. Maybe they don't tell us when, but they lay out what the cut schedule actually looks like, right? Yeah, so maybe that's what it is. It's they kind of tell us what it's going to look like, and that gives us maybe a dollar weakness. But right now, with all this dollar strength coming in, again, it's setting up for more of a dollar weakness based trade today. Indices all in the red. ES. Well, ESNQYM all down 0.5%. Russell down 1 1/3, going a little bit crazy today. I know Apple was having some problems yesterday. You can see Apple and Tesla both down pretty big. Looking at the commodities out there, oil dollars up, so you would expect the commodities to be a little mixed. And again, crude 71.66. I was hoping we'd be like 61, but no, 71.66. It's up 1.8%. Natural gas up at 269.5, up 5% on the day. Again, 5% obviously happens with natural gas, more so than other things. But man, why can't it be down 5%? I mean, I guess it's 36 degrees outside, right? It's 36 degrees outside. If you think about it, it's like, well, I don't know. It's an okay spot. Yeah, it's fine. Gold and silver both down pretty big. Again, the dollar moving the way that it is. Gold down, gold is down. I say down, but it's at 235 or 2035, a little bit higher than what it should be. And then silver at 23. Again, we're playing with that whole number there, right? We talked about 23, 22, 23.50, right? 22.50, all going to be big levels. And again, hovering right around that 23 flat. Again, those are those magnetic areas, especially with FOMC talking today. It could be a launch point higher or lower. And, you know, who knows? Maybe we're in the range of 23.50 to 22.50 today, right? We got a 50-cent range up and down. Looking across, going to the Aussie dollar is number 1 today. There we go. Dollar strength, so we're seeing this deteriorate and push to the downside. So, you know, again, this is always kind of a, you know, if you draw the last big movement, obviously the peak over here was on the 23rd with all that dollar weakness. Now that we're back in, it's kind of like, all right, well, how do we draw this? Do we use the same levels? We can. We can use the same levels. We can take this and go here. You can there's a lot going on right now at the 50 where we are now. So with U.S. trading coming online, we'll see if there's any change in there. We still have a Harry Potter and the alert is still valid right now. And we're looking for a break below 66.53. If we get strong data, we could push that far down today. It's only about 50 pips away. It does have a 62 pip or I'm sorry, it's 62.95. So we'll just say 63 pip daily ATR. With that daily ATR pushing down, yeah, I mean, it's, you know, with this push, Yeah, I think that's really what we're looking for. Not much. I wouldn't say that I don't really think there's much need for anything else. Well, we were talking about this and we got 2 pushes, but let's clear it. Just again, just trading when we weren't looking for it. There's a decent little push right there. Let's mark that one off for later on. 9 pips. I'm good with that. All right, so it's kind of what we're looking for right now. Looking for shorts if we break below. And again, we have a little bit of racetrack scenario down here from 66.53 all the way to 66.75. Aussie yen. All right, a little choppy. We're talking about pushes and we got some stabilization. It's funny, we came up and we grabbed, it looked like, in Aussie yen, it looks like the 27th. We weren't obviously here. Well, I was definitely not looking at charts on Wednesday, the 27th. You can see we had these levels up here that we talked about. And guess what? Levels hit. This one was a break-even one on the 20th. Yeah, we had that one already. Target 1 hit. Target 2, not quite a hit, but we'll pull it. And let's see what we are dealing with now. We're looking for a bounce from that level. I'm just going to remove it. This is the 13th. Let's take this up just to, yeah, still around the 50. Let's say that's probably going to be our target right now. By the way, I was so busy during the break. I got into it a little bit, right? Into the Pine editor, but not as much as I wanted. Obviously, it's not on the chart, so it's not finished. I did get into it, but not at the same level that I wanted to. Still working on it though. I'd like to see if we can get a bounce in here. I think there's a possibility of a reversal coming off this level right here. Again, it is a 50 from kind of the spike. And again, I don't like using spikes on that one, but it was a pretty strong point here. And again, with a spike up and then a big smash back down again, there is a level. And then again, technically right now, it is a 50% retracement level. I like it better than a 61.8. So I think we see what happens when we come down to 95.65. Right now, obviously sideways movement, but if we push down a little bit lower, I think we have the possibility for this to come down and kind of do one of these up here and then go, right? Something along those lines is kind of what I'm thinking. And again, maybe it does it here, maybe it does it here, maybe it does it here, but kind of using this level where we push into the level a little bit and then we start to push back out and then try to form a reversal. It's not a bad reversal level. So again, keep it on your radar. Not necessarily a trade entry for right now. Euro dollar. So euro dollar continuing to push lower. We're looking for this pushback here. 1, 2, 3. Yeah, when it hit here, that was 4 and then 5. Yeah, so unfortunately that went out. We can take that off. Do we want to run that all the way up? Nope, doesn't matter. 78's there. 1, 2, 3. Don't need this. This is from last year. Pull that one off. This one is still valid. Let's run this all the way up. We can take that level off now. Look at this. If you had traded that, look at the 23. Boom, 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 boom. Broke it and then just collapsed away. So for anybody that traded the 23.6 on that one. Yeah, we'll use this one. All right, so we do have a little reversal level on this one as well. Again, there is a level sitting at the 61.8. So yeah, we're looking for the Harry Potter, but there is a confirmation. And now that it is a 61.8, I also think this is a level where we could see a potential reversal. And we actually have 2 scenarios here. One, if we push deep into the zone, right? Here, let's do it this way. If we push deep into the zone, right? As we push into the zone, there's a couple things that can happen. If it starts to base and go sideways, you guys know what we're looking for. We're looking for a break of this zone, even though the 61.8's there. We're looking for a push down, a push up, and down. And that's kind of what we're looking for, right? Kind of that like that Harry Potter-ish pattern. Okay, we'll stick that there. The other option is we come in and then we immediately leave. We come in and then we start to rally up this way. So instead of going basing sideways and down, we push back up. Then we push down. And again, as long as we don't push too far in there, then we're looking for one of those type scenarios. Now, remember, this one could also do this. Right? If we come down and we start the base below the area, we can use the area as a continuation. So there is kind of this option over here. And again, I don't know which one it's going to be, but these are basically the 2 things that we're looking for in this position. I think once we get in this area down here at 108.80-ish area, we really start to see what direction we're going to go in. But again, right now, those are the 2 possibilities. Whether we base, then we're looking for short. or if we just go straight through, we're looking for shorts. If we hit it and kind of start to bounce to the top side, look for a pullback and a reversal level. Again, pushing back up to potentially, again, 109.53. All right. But those are the two scenarios of what we're potentially looking for in that area. Like I said, I don't know which one it's going to be yet. We're still about 45 pips away. It's got a 26 pip 4-hour ATR. So this one probably won't move enough until FOMC. And again, if we rally up, if we get dollar weakness now going in FOMC, we could have a potential short coming from that area. Let's see. 17.14 is right there. So there. If we rally back up and we're holding, I'll just mark this off. Yeah, right there. Right there. I think there's a potential for a short as well. Okay. Because we do know that there is news coming right there. It's fine. But can I change the weight of it? There we go. All right. All right, we know we got news coming in right there. All right, to see what happens when it pushes back up. That's the top. Let's go there. All right, so a couple different scenarios here for the euro dollar. Euro pound. So euro pound, we're still kind of range bound. We did end up pushing a little bit higher, and it's easy to kind of draw this up. You can see we came back and we grabbed this level at the 50. We talked about that being a target. We grabbed it, we bounced off of, we came back up, and now we're kind of playing in there and going sideways right now. It looks like it's going to continue to fail and go lower. Our first profit target obviously hit, and it actually was a bounce. Our second profit target was down here at 86.22, so that would say that that's still the target to the downside. Hold on. I just saw this. Sterling's outlook looks rosier than euros for now. Haven't I been saying that? I feel like I've been saying that. Yeah. So right now, again, look for the chop. I like to see this continue to push to the downside. Obviously, that German CPI data is going to make an impact. We'll get some type of comment out of that. I don't know what it's going to be yet, but we'll see. But I do think there is something to that one. As that pushes. And again, overall, I think the next potential area is going to be a little bit lower down here for a reversal. But right now, I'm looking for 86.22 before I really do much with euro pound. But again, we've been talking about this. It's funny that it peaked on the 28th. 28th was like a weird day for everything, right? Euro saw tons of strength, pound saw tons of weakness, dollar saw tons of weakness. When those have been all the more powerful ones, it's like the market was like resetting, or like the market, the retail traders were out there resetting the market. For good day for what the reality of the overall economy and markets and things like that were, right? Pound's been in a much better position than the euro, and I think they continue to be. Again, you'll still make more money by having your money there than you will in the euro, right? You can still make money if you borrow euros and put it in a pound bank account, right? The swap will be beneficial for you. So yeah, but again, bearish is the name of the game on this one. It's funny that it did it in the off hours or the off week. It's like pushed back down, but looking for 86.26. Euro yen. So interesting that we got so close to 155. We got the 155.07, and those buyers stepped in, and we knew we had some levels. We had our targets. Looks like target one got hit, and then it went back up, and this one was out. It grabbed the upper one here. Again, there's your confirmation. Was that the 28th? No, it's the 27th. Missed it by a day. Take those out. Take those out now. This one, obviously, if you look at this, it took a bounce off that level higher. You can clear that. We know that the 155 is a big deal as well. So right now, this is where we're kind of... And what I would do is I would draw fibs from here. I would say from top to bottom right there. Right? Obviously, there's something going on right there. Again, it's 25 pips. Again, euro yen is bigger. It's got a 148 daily ATR. So again, when you see 25 pips, you're like, holy crap, that's a lot. Yeah, it is. Right? It is. Can I say where I'm going to put it? I feel like that's textile. No, I can't. Okay. I was like, why is it? I wish it would start here. I guess I could do it that way. I guess I can manipulate it a little bit. There we go. I can manipulate a little bit. Let's keep this thing honest. Right there. Can I say? No, it doesn't give me enough options. Nope. I want all the data. There's got to be a way to. I feel like maybe here. Nope. Guess I don't have the option to it. I was like, yeah, I don't need all that. I don't need percentages and all that. Be nice if I know I'm using it a little bit differently, but yeah, there. So if we come back into that level, look for potential reversals. Again, could it be an FOMC based position? Sure. Being that it's a proxy, again, use a little bit of take that with a grain of salt. And it's about 65 pips away, so it's got 4 hours worth of movement on that one. But overall, not a bad level. Now, maybe if we can time that with some of this data over here, the year-over-year inflation, the forecast. Interestingly enough, look at this. The year-over-year, right, for the euro, the forecast is it's going to be 3.8, where the previous was 3.5. If it comes, that's the expectation. You're like, wait a second, it's going up. Yeah, it's showing that it's going up. Is the EU going to continue to raise? No. At this point, I don't think anybody's going to raise. Even though inflation's going higher, I think it's going to be a temporary bump. But what if it comes in at like 3.6? It's lower than expected, which would be pretty weak for the euro, right? That would give us the ability to take some type of a trade off of it. So maybe we stick that here. And again, I think, it's inflation, so it's going to be, and even here. Hold on. Oh, it must be the German data. Why is that? It's weird. January 4th, 8 euro. It's weird. Not showing over here. Not showing over here, but we got it over here. And they are different. So, don't know. Maybe there's a little bit of an error there. But either way, I mean, they literally say the same thing. Inflation rate year over year. Inflation rate year over year. So it must be that they're for different. We know that this one is in there, right? But it should say over here. There's challenger cuts. That's the only year over year number I see in here. I don't know. Anyway, with that bit of data there, again, I think this has the potential of being a short opportunity. Both of them are expected to be much higher than what it was previously. But with the expectation they're going to be much higher, what if they come in at 3.7? Yeah, it's higher than it was before, but it's not what the market thought. European weakness. What if it comes in at 3.8? The market had already prepared for that one. People say a raise. Easy retail trader trap. So there's two different opportunities in there to get short the euro. So I think we're looking for that. Question is, will the yen screw it up for us in the next 24 hours? That's the big question. But I think we have potentials for shorts coming up 156.80. Pound dollar is like stuck. So same thing. It's the 28th. That's when the dollar had the ultimate weakness, and even though the pound was weaker there too. Dollar weakness was the name of the game. We do have a level down here. We talked about kind of having a little Harry Potter trade, a break below 126.08. And you can see, what did we do? We hit it. And then we hit it again. And then we came back up and we hit it again. And we're grinding. Well, guess what? We're going to start running out of buyers here rather soon. So it looks like we have the ability to get into this. And again, we do have an alert. We'll know when it comes through. Let's clean some of this old stuff up from before the holiday. That did actually go over, which is fine. Again, low volume time, so not necessarily surprised. Sliced through the 50 like it didn't exist. Sliced and actually it Harry Pottered off the 23. Came down. It's like, oh yeah, go long. It's like, yeah. And what did it do? Three hits off that one too. All right, 3 nice little hits off that one. Probably won't hold again, but we'll leave it up there. So right now we're looking for a breakthrough 126.08, looking for a push, and overall profit target should be right down here, 126.55. I'm sorry, 125.16, and then it looks like we actually have another little Harry Potter trade right below that one for a potential. So, so got some room in this one. Got some room. All right, let's see what the date is. Let's get all this off. I don't need this. Okay, so here's the situation. It was expected. Oh, they just made the adjustment. Did you see that? It literally just changed. Nice. Nice. They had a forecast. They're like, oh yeah. And then they adjusted it. So it basically held. It was, again, it didn't quite go to what the forecast was, but then there was an adjustment last time, right? Oops, not that one. You see that? It was 273, and they're like, nope, it's going a little bit higher. But like, no. Last time it was actually this amount, right? And then the forecast had been a little bit lower. So, but here's the situation where, I mean, technically with the adjustment, but it was really technically higher than the last reading, right? But the expectation was that it was going to be 8.84, and it came in less. Had this been 8.85, I bet you that would have been higher. So it did actually come down, but barely. And it's not even a color. It's just in black because it's considered the same. But you see this chart and you're like, well, why is this spiking, right? Why is it dollar weakness? Well, because it wasn't what the expectation was. It was lower. And that's what I think the European trade will be like tomorrow. So, yeah, Jolts basically just shows that we're holding firm. We're not really, I mean, it creeped down a little tiny bit, but nobody cares about that little tiny bit. That's not enough to really kind of move the market, right? That's not earth-shattering news. And we'll see. The Fed, we'll probably mention it today. I think it's probably noteworthy to mention during the Fed meeting or the Fed meeting minutes later. But is that data, is there any inflation being driven from the jobs now? I guess it's the bigger question. Let's see. I don't know. I wonder what. I'd like to know the data that they're using to justify that one right now. I bet I wouldn't be surprised if they mentioned the labor market still being strong. But is it inflation causing now? I think is the that's a big question. All right. I think let's put this over here just as a little word of warning. We'll look at that level. All right. Now this should return again. Is the pound in an amazing position right now? Is it super strong versus the United States? No, because we're talking about soft landing, inconceivably conceivable. They're already in a recession, so there's no question over there. Pound yen. All right, pound yen continuing to move. All right, so pound yen. We had a big level down here at. We were talking about a pushing down, but we knew we'd have some profit taking. It did push down finally. So let's get this one adjusted for this week of trading. ATR is still at 183. I don't need this picture now. Let's run this down just because it's there. We'll go to there. Let's see what we got. It looks like on the 27th, one of the levels that we drew, it rallied up to the 27th there. That one turned and rolled from there. There is a little bit of a drop. It's not a very good one. And again, it's formed on the 27th, which I don't love, but there was a drop at base, a drop, and then kind of a pullback in there. And again, it's sitting right at the 150, or sitting right at the 50 mark. And that happens to be at 180, 150-ish, right? So it's kind of in an area where we want to kind of be a little cautious with it. It's sitting right here. See here? The base, the drop, the pullback, and then it led that push. It's a 4 o'clock turn. It's there. I acknowledge it. I don't know if I love it. I don't know if I'm willing to pull the trigger on it, but it's there. So when we got to acknowledge that it's a 180, 150, right? It's a little Bacardi action there. It's there. The 50%'s there, but it's not. Actually, that's 151, not 181. Sorry. 181 would be almost like grain alcohol. Whoops, 90% proof. No, no 90 proof grain alcohol. It's a reversal spot, but I don't necessarily love it. I think the 61.8 level is a little bit better, even though, again, it confirmed it on the 27th, which I don't love. Again, I don't think the pound's great, but I think the pound is obviously in a better situation. Obviously, you're getting some comments from the BOJ and kind of hedging with what the BOJ policy is going to be. Thus far, the BOJ policy has been pretty disappointing. They came out, they made some comments, loved the comments, and then what did they do? They made some other comments that kind of went in the opposite direction of everything that we thought that they were going to do differently. But they will have policy change rather soon, I do believe. Yeah, so we're kind of sitting right at the 50% mark, so not great. Dollar CAD. All right, so dollar CAD. Looks like 27th. Yeah, the 27th was sitting right here. So again, we played that with that 130. Look, and you say it, boom, 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 playing with 132. And we kind of came up on the 29th, came back down, and now it's been dollar strength since actually, I guess since Monday right here. Right, since the first, really, I guess you can say Friday the 11th. We've been coming back up again, so we're back up to where we were. I mean, here's Friday the 20th. We're playing in the same level. There's a small piece there. I'm just gonna, you know what? At this point, I just reset the CAD completely. We can leave that one there. This was the 29th. Let's do that. We're just gonna go straight up mirror term with the dollar CAD. All right. Yeah, look at the basing. We're on the 23. Ooh. 16. Rally base confirmation push happens to be at the 133 mark. You can actually shrink that a little bit. We're going to shrink it to 14. It's not a bad spot. How far does it need to move? It's not bad. It's got to chop through this. So we'd like to see it come down, and it's probably going to have a little hiccup and then chop down. If it can come down in one candle, that'd be awesome. Needs to go 40. So this one has a 4-hour ATR of 27. I was wondering if we can go down and then the Fed talks about what their cuts look like or something bullish. That would be a nice little push. But I'm wondering if... Problem is, this is also a round number play. We're smack in the middle. We're at 46, sorry. We're almost dead middle, right? 33, we're at that 33.50-ish. We're going down that 50% between these two levels. We kind of need to drive up or drive down. 50 pips though in 4 hours is a little bit hard when it has a 27 pip ATR. I'm wondering if it's basically reversal time. If we kind of see what it does here and then look for FOMC to bump it above or below, and then we kind of push back into this standard area. Let's see. Yeah, this is Jolt's opening. So we know it's kind of like we need to see where we are then, right? We're gonna be here, we're gonna be here. Right now we're smack in the middle. But I do actually kind of like this one, but I want to see kind of where it's at for FOMC time frame. Okay, but it's not. We don't get many setups lately in dollar CAD, but yeah. All right, looks like we do have looks like dollar Swiss wise. Again, you can see a red, green, red in there. Typically, again, depending on how much. Let's see. We'll just do it this way. It's 20. It's kind of a lot. Kind of a lot. Actually, I guess you could take it there. It's 16. It's better. There you go. Not a bad little trade. We've stomached, again, we've seen the weakness come in. The question is, will we continue to see that weakness deteriorate for the rest of the day? So it's not bad. It's 16. Again, it touched a level up top that we had marked off previously. Not necessarily the best level. Rolling all the way down. It's kind of, and again, this was an old level. Boom, 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 boom. Yeah, but we can take it off. We can see the same thing, drop, base, confirmation. So, I mean, it's this level that triggered. Actually, we'll just put it to there. What's the risk on that one? 13.6, that's better. Yeah, so there would have been the level. Again, we didn't look. This was from Tuesday the 26th. I was not looking at charts Tuesday the 26th. But again, drop with the confirmation. Again, you're looking for the basing and big pushes. You're like, wow, it's a pretty explosive push right there. But there was where the base came in with the confirmation. And that's where you got it. That's where it came from. So we'll see. The profit is a little bit deep in there, but overall, not the worst. 13, and it was up what from the news. It's up 31. So I don't know, maybe we took it off early at 31. Let's see. Dollar yen. All right. Dollar yen rallying back again. So you can see dollar yen's on its push back up again. An old level that we had drawn. God, we drew this one back on like the 20th. Yeah, 20th. Let's do it this way. Whoops. Thought I clicked it right there. Right. I'd say that's a level for us. With it pulling back right now, again, we're gonna need a little bit of a help. It's got to go 80 pips. It's got a 4-hour ATR. We can see it. It has a 4-hour ATR of 50 pips. So it's got a lot of room to run there. It is a level that's been confirmed as a nice reversal level, but it's not in the best spot. So maybe FOMC helps bring it around. Again, FOMC is going to have components on both sides here, with dollar yen being a bit of a proxy too. Oh, excuse me. It's all right. It needs to move more. I don't have a great interest in it right now, but let's see from the opposite side. Whoops. Looks like there's more of a long in here. It's got 50 pips down. I'm wondering if this is what it's going to look like. It's 24, so it's kind of a little on the big side. And we could shrink this a little bit, actually. Let's bring it down to... There you go, 15. Much better. 15 for 45. There you go, 3.03. So something along those lines, right? Again, if we're there, we may just continue to push higher, right? We may just continue to push higher, but that's not necessarily the worst spot in a continued push up, right? We'll see. Again, this one is adjusting right now for FOMC at this point. All right, let's go over and look at Z Oil. American Trader comes online, right? 70.50 is for losers, and now we're at 72.50. So we're going up $2 since the U.S. Trader came online. Gotta love that. And the reality is, European market opened here. So I mean, European market was there, right? So Europeans were not super fooled. We had a level down here that we had, yeah, a little confirmation bounce off of it. We can remove these now. These are old positions just to clear them. Here's Jader. 70.50 is for losers. Here's the problem with this one. This one really can run up to 73.07. So I hate to say it, but yeah, it's got some room to run. I hate having targets of $73. I drove past the Sam's Club yesterday, and again, it was $2.97. Wait, what? Oh, first big winter snow in years is predicted for Saturday. It just came across my thing. What? The Right. First big winter snow in years for the Northeast just came across. From Virginia to Massachusetts should prepare for a major snowstorm this weekend. Nice. Nice. Okay, so that just popped up on my little news feed. So maybe that's why natural gas is up 5%, because I guess we're getting slaughtered. Getting a lot of snow, first time in years. Okay. We'll see with the snow. See, now I'm curious. See? Um the first, yeah. Is there snow totals? Um yep. Um oh, this is for Jersey. See, according to first chance of accumulating snow Saturday, Sunday. Oh, yeah, the 95 corridor is a mix. So see, I gotta mess with my emotions like that. It looks like I probably I don't. It doesn't even look like I'm getting anything. That's disappointing. All right, so depending on who you talk to, so yes, scared me. East Coast, Virginia, yeah, we're not getting anything. Um, it looks like I have precipitation. All right, so there you go. So I'm not getting as much. So I got the alert that it's going to be messy, um, but nothing crazy. Nah, it looks like I'm getting rain. If I lived in Western Maryland, I'd be getting snow. Freezing rain. I may get some freezing rain. Nah, I'm not even getting any freezing rain. I'm getting rain. All right, so yeah. So there you go. They lied to me. All those lies. Um, anyway, $73 in oil is where I'd say look for potential reversal to come back again. It's a nice little base in here. It's been confirmed over here. You guys can see it right here. Again, once it breaks 73, people are like, what? What? So Noro, I apologize. It looks like you're getting snow this weekend. All the snow will be going to Maryland. Nah, none of it's going to Maryland. Nah, it's gonna the Western Maryland. Remember, Maryland's that weird state, right? We have that really weird shape that you're like, hey, draw me a strange shape for a state. That would be Maryland, right? We actually have little mountains called hills in Western Maryland. Western Maryland is going to get a little snow because in mountains. Yeah, the Adirondacks are not, our East Coast mountains are not the Grand Canyon, but it looks like they're getting some. They'll get some snow, but I'm not going to get crap. I'm too close to. Being in Annapolis, I have the Chesapeake Bay that we have like the warm air. Because of the water, we don't get as much. Neuro. I'm not going to lie. I would love 18 to 24 inches of snow. I would take that in a heartbeat. Right? I would bring it. Right? I will make sure my 13-year-olds are at my house for that one. And I'd be like, here is what is called a shovel. Get out there and shovel it. Because this time, 13 years ago, here's where this is awesome, Neuro. 13 years ago, right? 13 years ago in January is when we had that snowstorm where we got like 2 feet of snow. And then not even like 5 days later, we got 2 more feet of snow. My in-laws were out and the boy's mom was pregnant at the time. So it'd be awesome that 13 years later, I could get another 2 feet of snow and now they can shovel it, not me. I think that would be awesome. I will purposely make sure that the snowblower is not working. Anyway, look for 73, look for turns of reversal. Natural gas, obviously natural gas is spiking. We know why. It actually is interesting that it did take a turn there. Why is it spiking? Obviously a major snowstorm on the East Coast. This is basically a selling opportunity. Wait for it to kind of turn and give us a reversal point. We'll see as it continues to progress as well. Obviously it's only Wednesday. We got a couple days to go. It looks like Pennsylvania is getting blasted. It's almost like they drew a line. So yeah, Pennsylvania. And it looks like anything from like Trenton north on Sunday is getting crushed. Boston, Maine. Yeah, it looks like you guys are all getting it. I'm not getting anything. So yeah, it's one of those things where we have the wet coming from the south. Yeah, it looks like Philadelphia is mix of drama and like lots of rain. I'm just getting rain. Yeah, it looks like I'm getting rain. And then it meets with the cold in basically from Roanoke, Virginia. Yeah, Roanoke. If you drew a diagonal line, Roanoke through now it's saying that there's a little bit of snow in Washington, D.C. I'm not getting enough. I got my hopes up. I'm not getting 2 feet. But Pennsylvania, if you guys are in Pittsburgh, Harrisburg, Scranton, Albany, Boston, you're getting snow this weekend. Have fun. This is going to be a selling opportunity. So as we get closer to the weekend approaches, you should look for a top on this one, and then this one should head back down. A lot of it's going to depend on how much snow actually hits the ground. So we will see. Gold having some problems. Whoop. Gold heading back down. So good thing about this though, and again, this is insane. Again, this just shows you what happens when it is super low. When I say low, I mean low institutional engagement, right? Between Christmas and New Year's, nobody's working there. All advisors are shut down. They're done after the second week. They lock their profits in, and it goes crazy. And obviously, they slaughtered the dollar, right? They slaughtered the dollar. So gold was up at 2088, right? Now it's all the way back down again. Right here, the 15th, the 20th, this is where we were beforehand. We were playing with the zone, and we're back down there. So this is the week, between Christmas and New Year's. It's out, and we're back where we should be. There is a short coming in. Again, if we can get down here, the 216 mark, you're seeing the chop back and forth here. And again, all the gain in gold immediately deteriorated back down again as they're starting to drive back down. Now, there is a level down here, and we have hit it before, this 2021 mark. That's where all the buyers kind of have been bouncing off the top side. It's lining up, right? I mean, honestly, with all this dollar strength, it is lining up for more of a kind of dollar weakness based trade with all the strength coming in. And maybe they give some information. That's kind of what it looks like. The reality is, yeah, are we raising? Yeah, but is the economy going to go into a recession? I mean, saying that, hey, listen, no soft landing, economy's strong. Yeah, I mean, it may keep them from raising at the rate that the market obviously believes. So, yeah, it's fine. We'll see this as it continues to deteriorate down. But right now, again, overall, I do fundamentally like gold short. I think it's way too high right now, but we'll see what happens with the Fed. And again, remember, FOMC, they can absolutely jack this one around as they mess with the dollar. It's going to come in right there. So we'll see. It's kind of a big push down to the 20 mark. But wouldn't be surprised if we come down and then this spikes up and then it continues short. Silver, 3. Now look at silver. So look at this. Running, all playing in this right here, the 2360 mark. Look, came back up, and it's interesting. Gold, monstrous peak. Silver didn't have the monstrous peak. I mean, I guess here on the 22nd, that was beforehand. Here's the big peak on the 28th. It's not a peak. It's just a lower valley. And this one continued to push. So let's clear all this up. We were looking for shorts. So we wanted that to go lower. Pull those off. And again, you can see not a good Harry Potter. Here's the base there. This one punched through again, and then bam, there was your base, right? So trade is over. We were looking for the short. It's out. And look at this. This one is continuing. Now, it is a little bit crazy right now. Silver should be double what gold is. It's down 3%. Gold's down 1%. So it's a little bit higher. And look at it. It's trying to make an attempt to get back onto that 2250 mark. Again, 2250, 23, and 2350 are the 3 big areas right now that have somewhat of a magnetic personality, in my opinion, for silver. I do think it is a little bit high. I think 2250 for silver is where it kind of belongs right now. Should it be lower? Yeah, but I think 2250 kind of makes a lot of sense of where it technically should be. So we'll see as that continues to push lower. Okay. Right now, I'm not interested in playing much. I do agree with what it's doing. I think it's resetting. If we do have some basing right around that, 1 to 130 time frame, I think you could absolutely take this one for a long. Again, I wouldn't be surprised if there's a big pop up and down. Now, dollar. Again, you can see, look at this. It's bouncing right off that 22 mark that we drew, right? We talked about all the sellers in there, and what did it do? It hit it and pulled back again, but it's trying to eat those sellers away. But it is sitting in an area of sellers on a bigger time frame. And if it holds here for 4 hours, just plays back and forth in this area, again, it looks like it's more of a shorting opportunity. So, yeah, I mean, there's something there. There is something there. Yeah, it's fine. Again, looks more like a dollar short today for FOMC. Yes, let's see what we got in here real quick. Boom, boom, boom. Nice little pullback there. In the overnight, were they fooled? 9:15 now. We were breaking through lows. So I mean, if anything, it's just continued the trend from this morning. Here's the European session. There's your 3 o'clock. Whoops. Whoop. Right there. There's your 3 o'clock candle. So Europeans obviously took this market and continue to push lower. So they're just, again, is there anything? No. There was a nasty little hiccup for anybody that was short. Here's the short right there. And again, probably got stopped out with that news. So I think the turning point today for this one is going to be FOMC. We'll see what we get out of FOMC, whether it's going to be a push or not. But I think that's where the potential is right now. Again, overall bearish. I mean, the comments like, hey, look at that. Soft landing sounds like it's going to be great. And why is the market going this way? Because, again, the dollar's at 1%. The dollar's back up to 102. So still a little bit of craziness. NQ, did it have anything? Let's see. Again, nothing confirmed in the overnight 8. Well, actually, that's not true. There's a 6 o'clock. Did it hit it? That's unfortunate. It just missed it by a little bit. Look how close that one missed. 638. Yeah, you had to use that one. And maybe you put it there. Right. It's a 4 o'clock confirmation at 5:15, but look, it missed it. It spiked up at 10. Look how close that missed by. It's a nice little trade, but yeah, got front run by just a little tiny bit. The news was not enough to bunch it in there. It would have been nice. What does the 1 to 3 look like on that one? And again, not opening print. This is a news trade. God, look at that. That would have been nice. Look at that. Oops, I'm off by a little bit. Look, you would have been out. Would have been out. Look how close that was. Yeah, not too shabby. YM. All right, so overall YM, again, looks very, very similar, continuing to push down. Let's see. Here's your 9, your 9:15. They were split. One was red, one was green. We were already low. Is there any confirmed overnights? There was a level sitting right there with a confirmation, kind of the same deal at 9:30, actually. It missed it. It was close. It was really, really close. It pulled right back up and just missed it by a smidge. But yeah, up and oof, yeah. So close yet so far. Russell, did we get anything at Russell? Russell had the pop. It's kind of an 8:15 basing level. You could say, listen, there's a level of basing right there. And there's your confirmation. This one, again, there was a 9:30 in there. It ran up at 9:15 to grab this level here and then continue to push lower. So, I mean, it had one. Did it go? This is an old level down here. We can pull this guy off. I don't know. Would this have completed? So it's not really a confirmed. We're looking for more this. This is more what we're looking for in opening print. Russell obviously gets a little bit crazy. This is 4:15 confirmed at 5:45 with a nice push out. Those are what we're looking for. This one continued to push. But there was a base in there, and there technically, I mean, there was a zone there. It came back up, and there's 1 to 3.6. There's 1 to 3.03, and you can see it shot right up at 9:30, came and turned around and tagged it and was out. And you can see it pushed much past. And even with the news, if it spiked back up again, you were out. So you had two different opportunities for that one. So I mean, technically, if you use the open as the confirmation, the news, so it kind of doubled up, but it's the same trade. Ideally, this is the zone we're looking for, not a basing like this. But this one went down, popped up at 9:15 for the open. And then obviously the news did it too. So a couple different ways to skin that cat. All right. With that, let's go ahead and do our drawing. We have 3 in. Will W Neuro, I will give this the 230. That's like I typically do. And I have no idea who won last year, but we're going to be starting flush. Give it 20 seconds, just in case our California and North Carolina participant are getting involved. 17 seconds, 10 more. Here we go. We'll do the countdown. 5, 4, 3, 2, 1. Boom. Look at that. All right, winner thanks drawing is Ernest. Ernest takes it on day 1. There we go. Spent big. Again, that strategy is eating your chips away. Used to be top 3, and you're all the way down here, my friend. I think the overspend strategy, getting you some wins, but taking you out of the leaderboard. All right, so with that, I'm out of here. We'll catch you guys tomorrow. Again, FOMC obviously going to be a big deal. Maybe some Chinese data tonight, but FOMC too will give us a lot of data. And then tomorrow, all the data comes in early. ADP non-farm, oil is tomorrow. Natural gas is tomorrow. Again, because of the holiday, everything is pushed back. Here you go. Look at this. 15 minutes ago, March rate call is pretty long way away. Is it though? I mean, yeah, I guess it's too much. But again, are they raising it? No. Are they cutting it? I don't know. I think he's trying to placate people, but really, we're going to cut it in March? No, I don't think so. The economy is not collapsing on itself. So way to make yourself seem important. All right, with that, I'm out of here. More snow for Texas, but only. Ernest is Dallas. He's a Dallas guy. He won't get snow. He'll get ice. He'll get like 3 inches of ice. That airport, I hate that airport. So anyway, I'll catch you guys tomorrow. You guys have a good one. Everybody take care. And again, hope everybody had a great New Year. And I'll see you tomorrow. Take care.